CEO at Logistic Properties of Americas at the New York Stock Exchange. Esteban, thanks for being here on the Schwab Network. Congratulations.
Thank you, Oliver. Pleasure to be here.
Tell us about your business. You guys just rang the bell. You went public via SPAC merger. Your shares are going nuts. What's going on?
Look, Oliver, we're very pleased about the reception that the market has been giving to us. Our focus really is on the fundamentals, and we're enjoying the evolution of ringing the bell and mostly focusing on delivering and executing. We're a leading developer, owner, and manager of Class A industrial and logistics real estate in Central and South America, with the prospect of entering Mexico in the near term. And we welcome just the opening bell right now because we want to have more access to capital to continue developing our solid business.
So you're a real estate investor, developer. You're not operating in the warehouses, right? This is a real estate play.
That's exactly. We are a vertically integrated real estate platform, and we deliver the real estate and lease it on long-term contracts to blue chip tenants. So the names we serve are the household names that you would expect to find in the U.S. So we have properties leased out to IKEA, Kuehne+Nagel, Expeditors, Cargill, Samsung, DHL. That's the sort of tenant we serve because they find our product, our institutional DNA to be fitting for their supply chain logistics, which are sensitive at the time. And it's the new nearshoring trend that we're seeing right now. And that's why Mexico is our next stop.
So what is the process of the goods coming in and going out? Where are they coming from and where are they generally going?
It depends by the market, by each market. Right now, we have presence in Costa Rica, Colombia, Peru. These are most consumption-driven markets. They're not export-led markets like the case would be in Mexico or other geographies in Latin America. So they're mostly coming from abroad and then being distributed locally. All the types of goods, basic necessities most of the time. That makes our business very, to a high degree, predictable and anti-cyclical, just because of the cash flow predictability that we have in our underlying assets. We're essentially fully occupied, and we have a lot of opportunity ahead for us. That's why we decided to knock the doors of the New York Stock Exchange and continue our pathway into our growth.
What is the status of reshoring and nearshoring post-COVID? I mean, this was a major theme a couple of years ago coming out of the pandemic. Is there still a lot of change happening, or has the supply chain kind of settled in? What do you see as that trajectory right now?
Oliver, it's a great point. What we see right now is that we're only in the early stages. Frankly, nearshoring, to double click on that term, is essentially the rethinking and the replumbing of global supply chains, and that cannot be done in 2, 3, or even 5 years, in my opinion. It's going to require time and capital. So now that companies are locating themselves in markets such as Mexico or other places in Latin America, that is really coming across with a lot of opportunity for us. What that means also is when we think about nearshoring, many of these companies don't want to do it themselves. They look to a third-party provider like us who already have the know-how and do this in an efficient manner so they can operate and just focus on the core business that they have at hand. But the pandemic was really an accelerator, especially in Latin America, where e-commerce is really at its infancy, Oliver. Much of that is precisely driven by the fact that there was no banking penetration. With the shutdowns, people had to start shopping online, which previously was not the case. So you can imagine that while in the US you have turned into just-in-case logistics, redundancy, most of Latin America is just being built from the ground up because it's underserved and underpenetrated.
Okay. Tell me about the finances that you want investors to pay attention to now that you're publicly traded. You've got American eyes on you as investors now. Obviously, as I mentioned, the stock's going nuts here. You mentioned that you wanted to raise some money to continue to invest. What should we be looking for? Is it just square footage accumulation? Is it cash flow? Do you prioritize profits, or is it growth? Give me kind of the 60-second financial rundown, Esteban.
That's really important. So we are fully focused on fundamentals in a more classic and traditional way. I would say the mother metric in our business is NOI, net operating income. And just to give you a sense of how that has evolved over the last years, since 2019, we have basically tripled our NOI. And we have grown our GLA, our gross leasable area, just the square footage, by 2.5 times. So we're just seeing that ramp up. It just provides further evidence of the sort of traction that we have in our markets for our product. And again, with the backing and good credit behind the tenants that we serve, which is critical as we look to finance our assets. The higher for longer interest rate theme is going to just separate the market from the institutional players. We are a pure play focused platform, only just doing logistics and industrial. That's really going to set us apart. So that profile is really an opportunity for U.S. investors, frankly, as they want to diversify their portfolios globally. And it's very hard to get this sort of access, uncorrelated access, because we're in different geographies from their typical companies that serve in the industrial and logistics space.
Well, I will say this year we've seen international stocks outperform. I've heard a lot of portfolio managers talking about wanting to expand the exposure and reach. So maybe that's the interest to some degree behind that big stock move. So pressure's on. We'll be watching. Thanks a lot for your time, Esteban.
Thank you very much, Oliver. Pleasure
Thanks,
to be
and
here.
congrats on the debut.